No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. We're going to be talking about some risks this morning that we talk about market risks all the time, and we talked about the effects on the market of the virus and how COVID-19 has impacted the markets and the economy, of course. And you see it all over the news all the time. But how does that affect you as far as retirement, and how do you prepare and plan for these types of disruptions, if you will, in our normal events? So, for instance, a pandemic, how do you plan for something like that? The way is that you think in terms of bear markets. So we went into a bear market with the pandemic basically because we shut down. We go into a bear market from February 19 of this year to March 23rd. The market dropped 34%. Since then, not only have we recovered from that almost entirely, we're certainly ahead of where we were at the beginning of the year. We're seeing then the markets now are where are we going to go from here? What's the bigger risk? And the bigger risk right now is the election. So now we need to be thinking in terms of what impact that might have. So let's set politics part aside and let's just look at some facts. So one of the difficulties when we're looking from a political perspective is that we get into this personality politics where we're maybe swayed by the charm of a person, and they got a nice smile, they're well spoken, but what are they saying? what are what's the platform, if you will, of the two different parties, and how might that impact things? Can we read these tea leaves a little bit and see what the impact could possibly be? So let's think about it for a second. One of those is, do you think that raising taxes, now we've just got a lot of debt, right? We just, with all the stimulus, all the different things to help the people get by through this difficult time, we've trillions of dollars have been added to our debt. Now, how are we going to pay that back? And there are different, I'm reading newsletters all the time and different CEOs and what they're saying, and other investment people from around the country that are, basically hundreds of billions of dollars that they're managing. And what are they looking at when, in their opinions as well? So, and then again, some common sense as far as how these things might be impacted. So one, again, when coming back to that about raising taxes. If you raise taxes across the board, the goal being that you want to increase the revenue, right, so that you can pay down this debt, hopefully, is one of those things, not just to be spending more. Now, to increase tax revenue, are we better off to do that by raising taxes? Because what happens when you raise taxes? Okay, people try to find ways to pay less tax. All right, so earnings, how is that affected? In particular, if you're going to raise taxes on corporations when they've just been reduced, what is that going to do? Do you think in terms of these corporations for one? If you're looking at how you're investing in the stock market, what are you investing in? You're investing in these same companies, right? You're investing in Apple and Microsoft and all the car companies and Johnson & Johnson and all the consumer staples and all these different companies that are out there we're investing in. And we want them to be successful because we want them to grow their business, grow their profits, and thus our stock prices go up, right? Our investments increase. And that's going to help us when we're trying to save for retirement and in retirement to stay ahead of inflation and taxes, those expenses that we all have to pay, right? So if taxes go up, it could dampen down stock prices. So all of it, what's happening? Okay, our out-of-pocket goes up, and our income, basically, in other words, the growth of our assets could be dampened down and go down. So this isn't something that we necessarily want to see. What's another one? But if it happens, we have to, I'm going to go through laying this out, but then we're going to be talking about how do I plan, how do I prepare myself for something that I may not be able to control. Okay, if the Democrats get elected, for instance, and this isn't a political show, it's a finance show, but it's a practical finance show. We're going to be looking at these things and what the impact can be on your finances. And so you can prepare for that. All right, so if the Democrats win, what does that do? Well, what have they said? They've said they're going to raise personal taxes and they're going to raise corporate taxes. If they raise corporate taxes, what do you think that does as far as the businesses go? If they have fewer dollars, are they going to hire more people? Are they going to be able to grow their businesses as rapidly as they might otherwise be able to do? If you raise corporate taxes to the point that we're no longer as competitive on the world stage, does that mean these corporations, these large companies that have holdings over in, I mean, they have subsidiaries, if you will, over in other countries, right? China being one of those. So are they going to, when you reduce taxes, it's been big talk about the amount of money that these corporations have overseas that they don't want to bring back in because they don't want to have to pay these big taxes on it. So they just keep investing over there where taxes are lower. So what do we do if we bring them back over here? If we reduce taxes, then they're more likely to bring that money back here, grow their operations here. That's why you hear talk of more factories opening up and manufacturers, car companies and others. They're saying, yeah, we'll invest here because now our taxes are lower, it's more competitive. What's the other piece that has to come into play? The workforce, right? So if we can get more people working, and more people then, what do they do when they're working? They're paying taxes. So if we have more people paying taxes, does that give us a more stable tax? As a government, do we have a more stable tax revenue coming in than if we're trying to tax a fewer amount of people at a higher amount? Okay, so broadening the tax base makes a lot of sense. Okay, and we're seeing some benefits from that with the markets and with the economy and that, even with the pandemic. In fact, maybe the growth that has occurred is a direct result of those policies that were being pursued, deregulation being another one. If you're regulating an industry, and we can again look at the different party platforms, one of them being the coal industry. Okay, we're going to regulate the coal industry out of business. That was the previous administration's, and they were very clear about doing that because they were concerned about air pollution and other things, and they said, one of the ways to do that, even though the coal industry, has improved dramatically in terms of clean energy and that kind of thing, the same piece goes, we have coal-powered plants that need that coal. All right, so what do we do? Well, if we regulated to the point that, and did to the point that they almost went out of business, now you've got all these coal miners out there, 6-figure jobs, by the way. Okay, what are they going to do? They're out of work, and all the businesses surrounding that business, right, that feed off of it, all the small companies, and that they got into trouble, right, meaning that they were going out of business. They didn't have the same revenues coming in. It basically impoverished an area. Now, Trump comes in and he deregulates, and he says, okay, we're going to do away with all these onerous regulations that are putting this industry out of business and save this industry. Because what happens if you put it out of business? Guess what? We still need coal. Where do we get it? China. So let's shut down the industry here and go overseas and buy it. Does that make sense? Do you think that it just pollutes over there and it doesn't affect the whole world? It's the point of making smarter decisions with regard to our economy, which is going to affect us as far as our finances go. All right, the other thing, when you talk about those kinds of things, we can't control that. We can vote, of course, we can talk to our friends about these things and hope that, that it works out. But if it doesn't, what is your plan for these, for the eventuality of that? As an example, if the Democrats win, right, and they do implement what they said they're going to implement, raising taxes, kicking back up regulations on certain industries to try to, again, on coal and the rest, what effect is that going to have on your finances, on the stock market? And what is your plan if that happens and we go into a recession and into a bear market? What is your plan to ride that out? We're going to talk about that and help you and share some strategies with you to help protect you and help you prepare for what may be coming. All right? But first a break. Join me here. I'll be right back on the Retirement Report.